I don't care if it's Bitcoin or it's XRP or it's gold or it's silver or it's platinum, whatever it is, the one thing about the metals and the cryptos is they're liquid. You need liquidity to be able to do it, but just by leaving your money in dollars, in 6 months, if you had $1 million in gold and $1 million in cash just since the beginning of the year, your million in cash is worth 890,000 purchasing power. Your million in gold is worth 1.4, 1.5 million. So that's the difference. In just half a year, it's going the complete opposite direction. Gold is up
That's
40%,
right.
the dollar's down 11. So but this is a trend that will only accelerate if, and look at Stephen Miran, who is now on the Fed, and he's the architect of the Mar-a-Lago Accord. A
Yep.
weaker dollar is what they want. This is just beginning. You could see the dollar go all the way down to 70 on the index, and if that happens, you'll see gold and silver higher than you can imagine. But when you see companies like Goldman Sachs saying $5,000 and 4,000 by next year, no matter what, I mean, they
Where
have
is
been
it at
saying
right
this all
now?
the way up. Right now, and I would expect today to be a little bit of a pullback because the non-farm payroll numbers come out tomorrow, where they always try to paint that in a certain way. But right now, the futures, let's look at the futures. The silver market futures are down a bit at 41.29, and a lot of people think that it will go that high or higher once it is revalued. And revaluing gold, remember, the most important concept to remember when you talk about gold revaluation is that it's not about revaluing gold per se. It is, but it's about devaluing the dollar, which is the whole idea behind being able to sell manufacturing goods. The pegging of gold at a much higher level to the treasury allows us to bring everything back with low interest rates. It allows us to keep the back end of the treasury market cheap with low interest rates. Yes, you have to buy the gold, or if you already have it, if the government has it, they just hold it. They have to deliver it at some point, but all of the demand for those treasuries won't cost the government any borrowing costs. So if you have zero coupon on those bonds, redeemability in gold down the road, then all of that borrowing, which will fund the ability to bring back manufacturing, is at zero borrowing costs. Yes, they have to deliver the gold. So what? If they really do have it and all of this reshoring is part of that, then that's okay. The stablecoin passage of the Genius Act and all of the companies that will issue dollar-based stablecoins, synthetic demand for the Treasury instead of organic demand, that's what funds the day-to-day of the government. So now you have the ability to bring back manufacturing inexpensively, to sell it through a weak dollar. Everyone's trading in their local currencies, and maybe you got a way out where your GDP starts to really pop because you're making things again and putting people back to work. And to me, it's the only way out I see. The long-term average between the two, the ratio, for the last 100+ years has been about 45-1. 70-1 is way higher than it should be. It's coming out of the ground at 7-1. If we took 70-1 right now, just take $3,550 divided by 70, it's $50. Right now, silver at bare minimum should be 50, at bare minimum, 20% higher than its average for the past 100 years and 10 times higher than it's coming out of the ground at. This is all a function of central bank suppression, which is ending. Why is it ending? Just this year alone, in September, 42 point, and this is just in the first few days of the September contract, which is not a delivery month for September. Some months are, some months aren't. The ones that aren't are typically quiet. They still take deliveries, but a primary delivery month, silver, is not September. 42.1 million ounces, or 1,308 tons, just in the first week or so of the September delivery, has been delivered. 42.1 million ounces. Now, if any of you have ever held a mint box that's 500 ounces and know how heavy it is, imagine holding 42 million ounces. That came into COMEX just this month for September delivery. Who the hell's doing this? Where is it going? I mean, who's got the foresight to do this? In gold, it wasn't as big, but 267,200 ounces, or 8.3 tons. Who is bringing all of this metal into the United States? Do they know something we don't? Now, let me tell you, the amount of sophistication it takes to do this and wealth is extreme. The fact that no one on the mainstream is talking about it tells me that this is a much higher up strata where the people doing this are connected. They know what's coming. They know what is coming, as far as I'm concerned. You have silver right now with another 200 million ounce deficit for the 5th straight year, where demand for military and AI and green energy is creating a permanent floor under the price of silver, especially when you now inject into it reclassification as a critical mineral. These are places, and the U.S. government is telling you they're going to stockpile it. They sold their strategic stockpile years ago. They have to go into the open market to make eagles. So this should tell you that the government is telling you, we're going to put a floor under the price of silver. We need it. It's now critical. By the way, platinum is critical too. And the interesting thing is, if you look at the most shorted commodities in the history of the COMEX market, number 1 is silver, number 2 is platinum. Number 3 is gold. So that there's 8 Western banks that for the past 20 years have been suppressing the crap out of silver, number 1, the largest concentrated short position in the history of the COMEX market. Silver,
can they do it
platinum,
forever?
gold.
No, can they do
they
it?
could have. They could have, but now the rest of the world has caught on, and the rest of the world is sophisticated and coordinated. They're now doing things cooperatively. They're motivated, and they understand that this is the Achilles heel. But they do things in a manner whereby they're not going to do it so fast that they blow up the markets and then they lose. They'll do it just fast enough through continuous and repetitive delivery requests. These exchanges, these contracts have delivery mechanism that less than 1% ever stood for delivery. And now we're seeing massive deliveries. That's how you win. You win by taking delivery. And that's what all of these countries are doing, the sovereign wealth funds and the central banks. That's what we're doing now because we understand that they're doing it. They could have done it forever. The only successful way to manipulate a market over time is to push it in the direction that it is going. And when you think of China, Russia, and India, and Saudi Arabia, all of these countries, Saudi Arabia has always been aligned with the West. And these other countries were not wealthy or sophisticated or coordinated or motivated to do this. India and China were third world most of our lives. And now all of a sudden they're wealthy, they're coordinated, they get together and they say, this is happening, let's drain the exchanges. And I say it over and over and over again. The grain exchange, the guy that's behind it, the BRICS Grain Exchange, said we consume and produce more grain than they do in the West, but with the development of the BRICS Grain Exchange, that will change. They know what we're doing with all of the other commodities too. That's why the Chinese bought the London Metals Exchange, the base metals, all of the copper and the zinc and the lead. They're buying everything that would be strategic for the future. So no, we can't do it when there's that much demand, that much wealth, that much coordination, and standing for delivery. Never happened before like this. It is now. It's unfolding. So the suppression, Sarah, it's coming to an end. You know, there aren't many people who have the courage to say what you do. And you're right. I do think, you know, when I started saying reset, I was saying it in the context of Klaus Schwab. I'm like, bullshit, not going to happen. And the more you research it, and this is beyond Klaus Schwab, it's math. The system has to reset. It's the Western system. And you go and look at world reserve currencies going all the way back to the 1400s, and each one has about a 100-year run. Well, you know, we're past that right now. Yeah. And so I would just simply say that, I mean, the average number really is 50 years. We're well past that. Something has to change, and you can see not only by the coordination across the globe, you can see it by the actions here of our own government. And the interesting thing is, all of which I find to be maybe the most important piece of information is all the metal that's coming into COMEX. It signals something much bigger. As that's gold right. is a tier 1, it is has been revalued by the most powerful bank in the world. Silver is now a critical mineral. Platinum is now a critical mineral. You see all of these deliveries coming across the globe. You have the head of the Japanese market saying there is no platinum in London or Switzerland, yet they're still trading 3 million ounces a day for delivery. All of this stuff tells you we are on the cusp of it. And you're right, it is dangerous, it is frightening. But let's just simply say this, and I'll keep hammering it home. And I guarantee you that every week from this point forward, there will be so much stuff to talk about, Sarah. This is just beginning right
That's my
now.
point.
That I will just simply say, if you are not a contrarian, you're going to be a victim. It's time to understand that saving in dollars is what we all used to do. It is the absolute fastest way to go broke, period. I don't care what your vehicle is to save in. If it's, this is the whole thing. Assets feed you, liabilities eat you, and the wealthiest people in the world, due to the Cantillon effect, all of their assets or all of their wealth primarily is in assets. And over the last 50 years, look at what asset prices have done and look at what dollar valuations have done at the same time. $10,000 50 years ago was worth a hell lot more than it is today. But look at any of the assets that you have held for 50 years, what has happened to their value. And that's the lesson that you should take away from all of our discussions. Do not hold your wealth in dollars. Immediately start to think outside the box and start to look what the biggest money in the world is doing, and that is to de-dollarize and to buy tangible assets in your own possession.